just in terms of not just HDFC, but the financial sector in India, when people see those incredible growth rates, should they be investing now? Because is there more to come? Is this a nascent period for the financial industry in India?
No, I think the journey has just started. I think financial inclusion in India is taking shape. In fact, despite a hike in interest rates by 250 basis points, our credit growth remains at about 14-15%. And the larger ones are actually like HDFC doing better. They're clocking 16-18% credit growth. Second, I think there is a huge cross-sell opportunity. So if you see, for example, the combined entity HDFC and Bank, they have over 100 million customers, right? And the bank's unique customers are about 80 million. So there's a huge cross-sell opportunity as well. Our NPAs in a decade have been at the lowest at 3.9%. I mean, so asset quality is really improved. There is discipline in corporate balance sheet. Some of it is helped by also the reforms like the bankruptcy law. So the corporate balance sheets are in good space. Retail financial inclusion is happening in rural India, which I think the credit growth will continue in healthy double digit. And if you see after a long time, there are very early signs of the investment cycle playing out.
I've got to ask you because, anytime that you do have this kind of consolidation, even though it's like, related entities in some respect, is there, if you're looking at the financial space, is there the likelihood of even further consolidation? Because I imagine every time when you have these big corporations that get even bigger, it squeezes out the little guys.
Well, definitely. So if you see, it's been happening now for a while. We had almost 28 public sector banks. It's already down to about 12. We've seen now mergers happening between group entities. You'll possibly see more smaller banks also consolidating. India still has a very large number of banks. So I think some consolidation is due. Also, there was an arbitrage of being a non-bank financial institution and bank. That arbitrage has diminished over a period of time with RBI undertaking various steps on capital adequacy, on leverage, etc. And RBI has been a more conservative central banker. And that's why India's probably, managed this particular volatility also well. So there is definitely more consolidation in hands. It's just that in few pockets, the valuations have gone up. So a lot of banks trade at 3 times book value, 4 times book value. So while allocating money, you got to be a little more careful in terms of what valuations you are chasing while investing.
So is it a buy for you?
Sorry, I didn't get it.
Is HDFC a buy for you, even at these levels? Just to finish up.
Absolutely. Absolutely. If you see the combined entity now, it trades at about 15-16 times FY24 earnings. And in terms of valuation, HDFC has always been a premium. In last 10 years, it's actually one standard deviation below. So I think as I said, they're going to corner incremental share both on deposits and asset sides. And, their asset quality metrics has always been very good. In last 20 years, the net NPAs have only gone up by more than 1% just once in the last 2 decades.